Let me ask you this. Have you ever asked yourself, I wonder if there are any hidden tells in the stock market that provide opportunities before they actually occur? If so, you'll want to watch this video till the end because I'm going to show you how you can buy options before they move 500%. Hi, my name is Joshua Bellinger of OptionSizzle.com, and in this video, like I said, I'm going to walk you through a case study on how you can learn to identify opportunities in the option market and be able to take advantage of them for your own account. So here we're going to look at, and go back to the screen, and we're going to look at Family Dollar. For those that are not familiar with options, options are a leverage tool, and they provide investors the opportunity to take advantage of the moves in a stock or the underlying at a much steeper discount than buying the stock outright. It reduces the overall risk that they have in their portfolio. They make greater returns, and it really helps them avoid a lot of issues that may come with traditional investing with buying stocks. So we're going to take a look here, and what we're looking at is at Family Dollar stores. The ticker symbol is FDO. And what I want to show you is the news that occurred on June 6, 2014. This was after the close on a Friday going into the weekend. And what I want to show you is that there was a document and news that Carl Icahn was taking a 9.4 stake in Family Dollar and plans to push the retailer's management. He's trying to take over the board and push for value in the company. Now, what I want to show you is that at this time when this news came out on that Friday, that prices of this closed at $60, but after that news was released, it pushed into $66. So this was a bullish move that occurred, and the reaction of that stock was about a 10% move after hours. Now, going into Monday, we'll have to see how this opens, but what I want to break down to you is that there are tells in the option market that signal at times opportunities to get in to a stock that is ready to move. And the reason why is just like we discussed, that there is leverage that is available with the options, and they require less capital than buying stock. So if you can make more with less, why wouldn't you? So what I want to do here is I want to break down this activity. Now, most refer to this activity as unusual option activity. And you probably heard the term on CNBC and some other people possibly on Yahoo and things of that sort. And what I want to tell you is that unusual option activity is only a term. And there is a art or a system that goes into place. Now, I've been doing this for many years. I have a lot of experience. I've been quoted in a lot of publications for my work on identifying this kind of opportunity or finding opportunities like this. What I want to do in this video is to teach you some of what I look at and how you can start doing the process as well. So when we look at this, when we are focused on, and I look at option activity, there is a volume that we typically go against. So typically, just like in stocks, there's an average daily volume. And what we look at in the option market is that same. So if they're in FDO, if there's 1,000 contracts that's typically traded every day in FDO, and all of a sudden that there's 2,000 contracts, that's would be signaling unusual. That doesn't really give the whole picture, because then we have to start to dig down and dig deeper into understanding the activity. So with options compared to stock, options provide a little bit more transparency, and that is the wonderful thing about the option market. If you buy a call, you only profit if that underlying goes higher. If you buy a put, you have to wait for that stock or that underlying to go lower, and then you profit as well. Now, there's two other sides of it as well, but we are only going to focus on that. So if someone's buying calls, they are only playing for upside potential. And they're doing that because they're using limited capital, and they benefit if that does occur. Now, if the stock doesn't do anything, like what we're looking at here in the next 12 days, and we look at this 60 strike. So right now it's at 60.53. If nothing happens in the next 12 days, well, these people that paid, or what these options are right now, 12 days from now, they're going to be zero. Around that, they're going to have some possible intrinsic value, maybe 50 cents. So you can take out about 50 cents of that, and that's what that option will be worth because it only has 12 days of life to it. Same thing with this one. We look at these June 65. These are 65 calls, and the strike price is that 65. So at 60.53, we need about a $4.50 move. Now, these people are paying 10 to 20 cents, and if prices do move above there, they will profit. But that's pretty big. That's a big move for this. When we look at a $4.50 move on this, that is a very large move. Now, this is where we start to understand and start to dig deep, and this is the fun stuff. So there is a lot of what we refer to as unusual option activity, and you've probably heard some people talk about that there's no edge in there. And what I want to show you is that there is an edge, and I believe that there is an edge, and I just want to show you what I look at because there is an art to it, and there is some investigating that you have to do and experience that goes with it. The term unusual option activity, like I said, is just a term. It's only an indicator, and then from in that indication of interest, that's where we have to dig deep. So when we look at this, or when we start to dive in, what we want to focus in is, especially when I see news like that, was there any option activity? Because I wanted to see if anybody was tipped off. And this is something that happens a lot of times. So when I showed you the website optionsizzle.com, we have a free report. You download that free report. I talk more about unusual option activity with several case studies in there. Now, what I want to look at is that the volume here in this June contract on a Friday was 4,000 with the open interest, meaning that there's 4,500 contracts that are opened currently. And when we look at this, this sticks out to me. When you see out of the money call action like this, especially going into a Friday and 12 days, this is the investigating part. 12 days, they're buying these options that are typically would be worthless. These are lotto ticket trades, essentially, meaning that these are already priced into this move here, and there would be they have a price for a reason because they provide people that opportunity for that lotto ticket. But typically, these are priced to perfection, and there's nothing that's going to happen here. So you see that there is an open interest of 1,300 here, and these could be open interest from months before. However, when we look here, we have 1,500 contracts. Now, 1,500 is a lot more than 1,300. So we know right off the bat, when you look at this, you don't have to know and have any software that says that these traded on the offer that provide time and sales. We can identify this right away, and I can look at this and I can say there are new contracts being opened. The amount is unsure. Compared to this one, these could be still closing contracts, meaning that there are 500 contracts that are still around that haven't traded. Now, if we saw 5,000, well, that means we are seeing some opening contracts possibly in that. So when I look at this, I see, okay, these are opening. Let's start digging in here. Now, what I want to also look at is I look at the option chain. Start looking down, and we see these weekly options. There's nothing traded in these weekly options. They have 47 days, and all of a sudden, we see a 5,000 block here. Now, this does stick out like a sore thumb, but this is more after the fact. It's interesting, though. You see these 61 contracts here, and that is only about 50 cents with 47 days to expiration. Now, I do have some trades going along here, and you just have to kind of bear with me as I record this video. But when we start to look back, this is what we want to start to identify. So what I'm going to show you is a breakdown of the 25 top trades here. And this is a software that I talk about in my sizzle method report. So if you download that free report, I talk about what software I use, and then we talk about the sizzle method, and you can access that report. It's 30 pages, and that goes more in depth of my method of finding these activity, or this type of activity. So what we're looking at is on Friday's activity here, and I have talked in my recent article on optionsizzle.com about Friday action. In December of 2009, I actually was quoted, and this is what started the media attention to myself and optionsizzle.com. New York Community Bank on a Friday on December 2009, late into the close, there was this unusual activity that I picked up, and I was able to alert my private clients that were able to profit from it, and also those that follow me on social media like Twitter. So looking at this, the thing that stands out to me when we look here So it's always going to be obvious till after the fact. And this is not a video to say this always is going to be like this, because a lot of times you're going to miss opportunities. But the reason I do this and I track this is what I refer to as my Mark Cuban trade, meaning that if I do the work the right way and focus, and I know that this kind of stuff happens, I will get lucky one day. And I've been lucky sometimes, but one day it's going to kind of hit. I'm going to get it all correct. And it's going to be a very massive trade that I get behind, and it's going to be $1 million trade on that. I know that's really big, but this stuff happens in the option market all the time. And it's just about understanding it and then also being able to take advantage of it. And being able to pull the trigger is so different, because there's only sometimes a small window like we see here. 1458. This is the time that it traded here. All of a sudden, we see a big block of these out-of-the-money June contracts, again, with 12 days to expiration, all of a sudden being bought. That's what the ask side means, meaning that they were bought on the offer. The other indication on here is that the IVOL, which is implied volatility, is also higher here. So that shows me this was traded on the offer, and if we look at those spreads, that's 10 by 20. So it's a 10-cent spread. That's a 50% cut right in there. That's a wide spread. 50% meaning that if you bought on the offer and had to sell it right away, you lose 10 cents. That's 50% right there. You wouldn't want to do that. So those are those wide spreads. That shows me that's an aggressive buyer, meaning that they want to get in. Not only that, these contracts are $4.50 out of the money with 12 days to expiration. There are only one way that they're going to make money: if there's some kind of news that occurred on Friday, like Carl Icahn disclosing that he's going to take nearly a 10% stake. So implied volatility also moving higher indicates that this is a buyer. That's what we want to see. That's what I want to see. So if we look at that July weekly contract, it did trade on the offer here, but implied volatility was flat. So this kind of gives me a little bit of a, when I look at this, or when I would have seen it trade, I would have looked at this and it wouldn't have given me a full clear indication on there. So that's why sometimes it is a little tricky, because all the pieces don't really fit at one time. And sometimes it has to be where you just get a couple pieces and again, a little bit of luck as well. So what I want to show you is a breakdown of the activity. Again, this is the software that I use and I access every day. And what I want to show you is that these green represent calls. So this is that Friday call action. And if we go all the way back here to 516, we see massive green here. And this is activity I will break down to you. The red represents put activity. Now, what you would say is, well, Josh, how do you really get anything out of here? Looking back, I mean, obviously the news is hindsight, and I agree with you 100%. This is what we want to learn from, and this is what you would want to learn from, because this is how people position themselves in the option market. They're not going to raise a flag and says, hey, I am cheating right now. They're going to try to disguise their trades as best as they possibly can. So the interesting thing here is that we want to look and always understand implied volatility and always understand the skew. If we look here, this actually skewed a little bit lower here, and that doesn't really give me a clear indication, and I'll break down why most people think unusual option activity is not that effective. What is interesting here is that these skews actually point to exactly what we want here. Put activity to me right here only indicates to me, when I look at the stock volume, that these were probably hedges, meaning that they bought stock and went long puts to hedge a trade. So it doesn't really, looking at this, doesn't really indicate much to me. People can buy puts. It doesn't really indicate much. We want to always match it to see what's going on in the stock market with stock, because that's what happens a lot of times. That's one ingredient that a lot of people get wrong, is that they look at this and say, oh, it's very bearish, but they buy puts and at the same time it traded with stock. That is a hedge, meaning that they're long stock and short puts, and they're long those puts to protect them from downside. So that is what we're looking at here, and what I'm going to show you is the activity going back to 516. So looking at 516 here, what I want to show you is this October contract that traded, these October 60s. Now, the stock was only trading at $57, and this is what we want to see. Now, I will explain to you, when I look at activity like this, what happened is that there was a block of 20,000 that traded that day. So meaning one person bought 20,000 contracts. Now, this is not a trade that is bought and is entered on this platform. These are trades that have to be shopped around, what it's called, and meaning that there's a broker that has to facilitate this order. So somebody or a trader or firm says, hey, this is what we're looking to do. And then they call around and they have to find the other side of that trade. So because I know that and I understand the other side of that market, or the other side of that market because I've been on the other side of it, this doesn't represent to me a decisive buyer that's very bullish. This could be some kind of hedge that a firm is doing on a stock that they're doing. So this is where a lot of people say there's no edge in unusual option activity, because a 20,000 block, that's obvious that there's a firm behind it and they're not going out on a bullish position, which is, and I would agree with you, is correct. That's why we try to find that smaller activity. Big blocks like this are ones that I really don't put too much emphasis on because I know how they are traded. So this doesn't really stand out to me too much. Now, what I think and could be the scenario here is that Carl Icahn has a lot of money. He manages a fund, and this is a size trade that he could put on himself. So when we track back and we look at this, those October 60s with those 20,000 contracts, and they were picked up at $2.45. What I want you to do is I want you to look at those contracts coming up here and try to track back. My bet on these contracts, they are probably going to be up at least 300%. Now, the other one I want to show you as well is I want to show you the contracts that traded, I believe we're in the July 65 call. So this kind of stuff is very interesting to me because this provides a blueprint. What we're looking at here is we're looking at activity and trying to see the positioning before it. So a lot of times if someone knows, or if they're, let's say Carl Icahn's building a position, well, they're going to go strategically in the options market and they're going to do different things. They're not going to put their whole order in at once. They're going to position, and that's the opportunity that we have. Now, if someone's playing inside information that was leaked to them, that's when they go into a shorter term contract like we saw on FDO going back to those June options, which has me thinking someone leaks some information, which I know for sure, because if you come in late on a Friday like they did here and you buy these short-term contracts, again, options are a decaying asset. So you come in, you buy these out-of-the-money calls that have essentially, at this point, you lose 2 days, they're going to have 10 days of trading to them. You lose 2 days, they're going to be lower in value. So you come in, you get these out-of-the-money contracts, and you buy them late into a Friday. That is suspicious as it can be. So this is a blueprint. This shows me that someone is playing within the next 12 days. They're playing a short-term move. They're playing some kind of news, and this is where all this kind of goes into play. Now, this activity back here shows me that they're playing for something that has 63 days. So when you're a buyer of a contract or buyer of an option, your best friend is time. You need as much time as you possibly can because you don't want time to take you out of a trade. And if time eats away, that is something that is tough to overcome. So that's why you always want to make sure you have enough time. It's something that we talk about a lot of in our articles on Option Sizzle. If you're selling an option, that's beneficial. If you're buying an option, you want to make sure you have more than enough time. So these July 65 calls were bought at 55 cents that day. And let's go look at the Junes here. So I didn't really track back too much here, but I would look back at this open interest. This is something I would do as well after something in some kind of news like that. So that is what we typically want to see. This wouldn't have been so decisive to me. Now, if I look back at this open interest and I start seeing accumulation, so if we look back and it's 516 and let's say over the last 2 weeks, I've seen this July 65 come across my system, my eyes, the way that I review activity. And I seen this accumulation. So let's say the first time they traded 1,800 contracts, and that's open interest, and all of a sudden another 18 traded, and the next day that added on to this open interest. That shows that there's opening buyers typically if they traded on the offer. So if there is accumulation, that's what I want to see as well. And that's what you're typically see in something that has longer term. So with this is, to me, it looks like accumulation here, and this is where I start to backtrack. Also, this is how I try to forward track and finding opportunities to get involved in. So when we look here, going back, if prices open up the way that they should or were indicated on Friday, these buyers, especially here, are going to see a massive return of about 500%. Probably right about here. And the reason why is because if we look at prices here, we look at these 60s, they trade right now about $1.30. And if they move up to and open up about 65 or above 66, we can kind of get a good estimation of what those contract values will be. And that's going to be very interesting to see how this opens up. And what we're looking at here is just how can we take advantage of this opportunity? Well, this is after the fact, and this is with those moves that, wow, I wish I would have seen that hidden tell. Well, these are the hidden tells. This was the hidden tell that we could have identified here and been able to take advantage of. And this is the reason why I focus in on unusual option activity, again, to be my indicator. Then I use my sizzle method, the way that I process and I try to identify the best opportunities. It's not a perfect system. It's an art, and there's a lot of opportunities that you have to filter through. So if you like to learn more about the sizzle method and also download my free report, I really suggest going over to optionsizzle.com, clicking on the send me info button, and going and signing up for that free report. And also you'll have the opportunity to access the sizzle method report and also get a trial to the same software that I use as well. So you can start identifying your own ideas and your own opportunities, and hopefully one day or soon be able to find an FDO or other names that I review in case studies in the report, in the sizzle method, and also that free report. So if you have any questions, you can always feel free to leave them below this video. You can always contact myself at optionsizzle.com. You can reach me on Twitter and also Facebook. So I will talk to you in the future, and hopefully keep in touch with myself, and any questions that you have related to options and us being able to serve you to be a better options investor and trader, let us know.